Kia ora and welcome to episode 66 of Bridge Talks Business with Milford. Conflict in Iran, the resulting oil price spike dominating the news cycle this week. We'll talk about that in the podcast, but also take a deeper look at the underlying condition of the economy after reporting season on the NZX. First, here's your top 5 business bits. Coming in at number 1, the price of oil spiked, reaching highs of $118 a barrel as the Iran conflict intensified and oil fields came under attack. It remains highly volatile and swings on word from the White House as much as Tehran and Tel Aviv. Number 2, share markets were hit hard in regions most exposed to a negative energy price shock, namely Europe and Japan. There was also a rapid repricing of short-term interest rates across regions, although some of this actually reflects crowded positioning among investors rather than any fundamental impact of potential inflation. Number 3, between all these geopolitical headlines, we got a number of important data points on the US economy. The ISM survey was released, outlining very strong increases in the headline readings for both manufacturing, 30% of the economy, and services, 70%. Bit of a worry, the detail of the manufacturing report not only showed a jump in realised and expected activity, but also a jump in the prices component. Number 4, non-farm payrolls were the other key release last week, which missed market expectations quite drastically. The detail suggests some one-off impacts, strikes, weather, but markets will be watching future reports closely to confirm. Finally, number 5, the focus of the week ahead will be how the conflict in Iran progresses. We have seen reports of G7 countries being ready to release strategic oil reserves to manage oil price, but nothing has been confirmed there. We also get US inflation data for February, which could compound inflation concerns if the numbers prior to this increase in oil are already unfavourable. Every week here on the podcast, when something big happens, we get in one of our experts. And today we're speaking to Sam Trathui, Portfolio Manager at Milford. Just a reminder, this segment is informational only and should not be considered financial advice. There is a lot going on in the world, so let's bring in Sam. Sam, welcome back.
Hi, Ryan.
Good to see you. So I thought what we'd do is leave the global situation for a second. We'll come back and revisit that, but we'll start with reporting season in New Zealand. What are some of the themes that you saw coming through?
I think for the first time, basically, since we had the pandemic, this was the most positive reporting season that we've had. The most positive in the sense that for once it was clear that the domestic-facing businesses are coming off the bottom in terms of their activity levels, and the exporters are thriving. So lower exchange rates, high commodity prices benefiting them. The domestic-facing businesses, it was really about a bottom being put in. Companies were seeing slow pickups in activity levels. They weren't jumping for joy, but it was getting better. And on top of that, a lot of market analysts, for once, didn't downgrade their profit forecast for the year ahead, which has been a trend basically since the COVID hit. Underlying that, there was a signal that, look, New Zealanders did have a good time over summer, spending from some of the retailers who reported. They did print some pretty good numbers that showed, yes, we did spend up a lot versus last year. So that is a tick up in activity levels that is also pleasing to see.
All right, so again with the caveat that the world is changing quickly, but this should surely signal good things for our economic outlook as a country.
I think it's a step in the right direction. I think it's not jumping for joy yet, though, because of that grind that is still there in those domestic-facing businesses. So they are still slowly coming off the bottom. There's not a big step change in activity out there. And look, if you ask the CEO, for instance, of Fletcher Building that question, he'd say 2027, we can see our order book filling up, our pipeline of work filling up, but still we're pretty subdued for the year ahead. So just being balanced around that, Ryan. There is hope there, but it's not a way to the races yet.
What do we need to see to change that? What do we need to see to get some more optimism in your outlook?
Yeah, look, the big three drivers of the economy, the housing market and migration have been very strong historically, and then the labour market's the third one. It was interesting when the RBNZ spoke in February, they were talking about a labour-led recovery, which is something we haven't seen in a couple of decades, really. The New Zealand economy has been very much about the housing market creating wealth, and on the back of that, creating consumer spend. So that's a different sort of recovery to what we have seen in the past. But those three drivers broadly have been on the floor for the last couple of years. There's signs of life like what we're seeing in company results, but still pretty subdued. So watching those closely, if we did see them start to tick up, that would be a real sign to get more positive.
Because that's one of the big differences between us and Australia, isn't it? Post-COVID, their house prices have basically just kept going. Ours came right off the boil, and that's affected our ability to snap back.
Hugely. No, it has. That some of the Australian cities, Brisbane, Perth, Adelaide, for instance, they're growing at double digits at the moment compared to what we're seeing here. So strong housing markets there. They've also had, I think, stronger migration as well compared to us. So two factors there at play.
Sam, let's do a quick highlights, lowlights from reporting season for you.
I think taking the exporters first, A2 Milk was a standout there. So that was a former market darling. It's been through some issues for 3 or 4 years. The new CEO, David Bortolussi, who's been in place for that period, has put in a turnaround plan. It's starting to pay off. They're growing revenue nicely and competing very well against some of the large multinational businesses that they're up against up in China in that infant formula space. The lowlight, unfortunately, was Air New Zealand. They really didn't need this war that's occurred in the last week or so, on top of a number of issues that are impacting their business.
Yeah, let's talk about Air New Zealand a little bit more. How serious is this for them? And, what they're talking about in the last 24, 48 hours about the price of oil and the effect that might have on their prices, which we already think it does too much.
Yeah, no, that's totally right. I think basically they have a huge cost base. Labour, fuel, maintenance costs, landing charges, all these costs are going up, have been going up more than what they have been able to put up ticket prices over the last couple of years. And that's really impacted profitability, and it's made the business loss-making. You overlay that, the oil price going up, near on 50% in the last week or so, and they can hedge part of that, but they also can't hedge another component of it called the crack spread, which has gone through the roof, and that's really, really hurting their bottom line at the moment. So it's a tough situation to be in. The new CEO has announced a full strategic review to try and sort out their profitability, but it's pretty heavy going, and it's not a business that you can turn around quickly.
Right, let's talk about the Iran war. So, caveat that everything is quite fluid here because we're sort of hanging on a whim of what the White House is saying. They've just elected a new leader in Tehran. But from a sort of helicopter perspective, looking down, how does this affect everything you've just talked about with those New Zealand companies?
So I think luckily we are a long way from the conflict, which is pleasing. But the biggest question is really around the oil price and how long will it stay elevated for. So that's really a question around how long will the Strait of Hormuz be closed for? Will the oil price be, around $90 to $100 a barrel? That is it's a very short-term, hopefully, tax on filling up at the pump, and then the longer it goes on, the more it's going to spread into goods and services that we purchase and buy. So we're watching that the impact that it has on slowing ultimately economic growth in the country, which is unfortunately not the thing we want right now, but it is a risk. And I think we're reading the headlines like you, Ryan, trying to judge the duration of the war and the impact that oil price will, how long that oil price will stay elevated for.
Do we have an idea of how long is long enough to impact, to affect the recovery, or what price is high enough to affect the recovery?
That's a great question. I think, there's two elements to that. The sort of scariest scenario is a prolonged war where the Strait stays closed for quite an extended period, and it starts to impact the fuel stocks that we have here in New Zealand. You can hear the politicians down in Wellington talking about this. So we have about 50 days of supply in the country and on the water on its way to us. If that was to run down, I think that would cause a further spike higher. But in the short term, so outside of that downside scenario, it's more about managing the costs in the short term. It's difficult to say, exactly how much is someone going to put up their prices because of the higher oil price. There's competition elements to that, but it certainly will have an impact to inflation over that period.
All right, so that's sort of an overview of what's happening in Iran. What about back home? Looking ahead to the year that is before us, are there other risks to the economy in terms of slowdown, that sort of thing?
I think outside of the war in Iran, it is normal for activity, particularly large investment decisions, to slow down ahead of an election. So clearly we do have one later on this year. We are sort of, I guess, monitoring the policy that comes out from the political parties around that, and would expect to see, the potential for activity to pause or slow down a bit in those 2 or 3 months leading up to the election, depending on what comes out. That's not unusual. It happens for most elections. You see it in Australia. It has happened here in New Zealand multiple times before. So watch that.
We certainly will. Gosh, so we've got some promising news, we've got some uncertainty, and then a little bit more potential uncertainty with an election as well.
That's it.
Good thing you're keeping across it, Sam. Appreciate you filling us in this morning.
Thank you, Ryan.
That was Sam Trathui, Portfolio Manager at Milford, talking to us about reporting season here in New Zealand with some good news, some promising news, but also some uncertainty looking ahead in terms of what's happening in the Middle East and what's coming out of the White House. We'll keep you across those developments, of course, next week. Until then, don't forget to invest in yourselves.